One war, but a crisis far bigger than the battlefield. What began as a geopolitical flashpoint is now rapidly turning into a multi-layered economic disruption. Energy, trade, food, inflation and growth are all under strain at the same time. So how is one conflict triggering 5 simultaneous crises? And how deep could the global economic impact go? Take a closer look.
The global economic impact of the ongoing conflict is unfolding in multiple layers, starting with energy and trade. At the center of the disruption is the Strait of Hormuz, a narrow but critical route through which nearly 20% of the world's oil supply moves. Any threat to this corridor immediately tightens global supply and pushes oil prices higher. Markets are already pricing in risk, with crude expected to remain elevated if disruptions continue. But the impact extends beyond oil. Shipping routes are being rerouted, tanker movements are slowing, and insurance costs are rising sharply due to heightened security concerns. This is increasing freight costs and delaying cargo movement, creating early signs of stress in global trade flows. The second layer of the crisis is now visible in food and inflation. Energy prices directly influence agriculture, from fertilizer production to transportation. As fuel costs rise, fertilizer supply chains come under pressure, pushing up input costs for farmers. At the same time, higher logistics costs are making food more expensive to transport and distribute. This is feeding into a broader rise in food prices globally. The impact is also reflecting in headline inflation. Economies across regions, including Europe, are expected to see a measurable increase in inflation due to energy-led cost pressures. This is a classic cost-push inflation cycle, driven not by demand but by supply disruption. The final and most significant risk is to economic growth. Higher energy prices lead to rising inflation, which in turn limits the ability of central banks to ease interest rates. Prolonged high rates increase borrowing costs, reduce consumption, and slow down investment. This creates a feedback loop, where supply shocks begin to impact overall economic activity. There are growing concerns that if the conflict persists, it could trigger a broader global slowdown. Emerging economies remain particularly exposed due to their dependence on imports and sensitivity to price shocks. For countries like India, the impact could be more pronounced, with pressure on inflation, currency stability and fiscal balances. Business Bureau, WION, World is One.